This week on the Retirement Quick Tips podcast, I'm answering your questions. Today, I'm answering the question, my life insurance policy is expiring soon. Should I buy more? Now, this is a really common question that I get, especially if you have a term policy and not a whole life or permanent insurance. Because term policies, they expire. They might be 10, 20, or 30 years. And they typically expire at or around retirement. Maybe you bought the policy at 30 and it's expiring at age 60. So the question is, should I get a new policy? Should I not? Now, the answer depends. I want you to remember the primary purpose of life insurance, no matter what any salesperson tells you, is to provide for your family if something happens to you and you die unexpectedly. Yes, there are other reasons why you might buy life insurance beyond that, but that is the primary reason that you would buy. So if your family, if your spouse, if your kids, especially if you no longer have dependents, if they're going to be okay if you die unexpectedly next month or next year, then maybe you don't need additional life insurance. Also, keep in mind that if you're trying to purchase a policy later in life when you're closer to your mortality, the cost of life insurance is significantly higher. So you have to weigh that as well, knowing that hey, if I want to buy more life insurance, I'm going to have to pay a lot more for that than I did when I was 30, when they were likely not ever going to have to pay out on that policy, because here you are, it's expiring and you're still alive, you're still kicking. So your assets are also higher at this point, hopefully. So if your spouse or anyone who still depends on you is going to be okay financially if you die, you have enough in assets, you're married, but you have $1 million saved for retirement, and that's going to transfer to your spouse when you die, and they're going to be okay. Financially, you don't need to then re-up your insurance. That's probably unnecessary, especially if you no longer have dependents. Do you have kids who are still in college who are relying on you to pay their tuition? Do you have children still in the home? A lot of times, the financial needs of your children, once they're grown, hopefully, are not significant enough to require insurance. Now, some people, especially if you under special circumstances, special needs children who need the extra financial support and need to provide that on an ongoing basis, then maybe that would be a reason why you would continue life insurance. But again, it comes down to, is there enough of assets to provide for your family if something happens to you and you die early, unexpectedly? If the answer to that is yes, then you probably don't need additional insurance. But if you have assets that are going to be subject to estate taxes or inheritance taxes upon your death, insurance can serve a very important purpose in covering those taxes. So many people at 60, 65 years old, sometimes older, they'll buy life insurance in conjunction with their estate planning to preserve the full value of their estate to pass on to their loved ones. If you're expecting that you're going to owe, if you have a large estate, you're going to owe $1 million in estate taxes, well, you can have an insurance policy that's going to pay that and basically cover the taxes for you. So generally, people are underinsured early in life, maybe married, they have small children in the home, and their family depends on that income, but they don't buy enough insurance. They don't have enough to cover should something happen to them. But then we tend to be a bit overinsured later in life. Our family doesn't depend on those life insurance proceeds anymore. So my suggestion to you is to take the time to understand the estate and inheritance taxes in your particular state. For example, in Oregon, where I live, the estate tax threshold kicks in at an estate of $1 million. That's a pretty low bar. So any estate higher than that is going to be subject to the estate tax in Oregon, which tops out currently at 16%. In Washington, up north, just to the north of us, where my sister lives, that threshold is higher. Estate tax doesn't kick in until a little bit over $2 million, but the tax rate's also higher too. It tops out at 20%. So those are pretty low thresholds. Many people who die in Oregon and Washington are going to have estates that are subject to tax, whereas a lot of other states have zero estate tax at all. In fact, most states have zero tax. So I guess that makes me I don't know. I probably shouldn't stay in Washington or Oregon when I get a bit older if I want to avoid those estate taxes. So you want to understand that in your particular state, whether or not your assets will be subject to some type of estate tax in where you live or subject to federal estate taxes. Now, most estates actually won't be because the exemption or that threshold is much, much higher at the federal level. But that doesn't mean that it's not going to change. It used to be a lot lower. And so that's always changing. So you want to pay attention to those things because you can explore then whether or not more insurance or some new policy would make sense in your particular situation, especially if you want to avoid estate or inheritance taxes. All right, that's it for today. Thank you so much for listening. My name is Ashley Mitchell, and this is the Retirement Quick Tips Podcast.